The dollar has officially broken through that key level at 110 to create its new first lower low of 2022, which is extremely bullish for assets. Whether you're looking at commodities, stocks, crypto, nearly everything is denominated in the global reserve currency, aka the US dollar. So when the denominator gets a lot weaker, it makes it a lot easier for the numerator, aka Bitcoin or any stock index or any commodity nearly that you're looking at to go up in value. So this has caused mass destruction in 2022, and now you're clearly seeing that the strength is also falling off a cliff, breaking below that level. Again, very bullish for assets and very bullish for foreign currencies as well. You can see that the euro had a massive downtrend all of 2022, and I obviously live inside the United States. I can't imagine having all of the assets go down in value. This has been the largest sell-off, by the way, that we've ever seen in US dollar terms in financial market history. So more money has been pulled out of financial markets in 2022 than we have ever seen before. And not because, typically you see when stocks go down, bonds go up, or when bonds go down, stocks go up, right? The regular 60-40 portfolio is actually lower than it would have been previous to COVID. So 60-40 portfolios, the well-diversified portfolio has gotten absolutely crushed because everything has gone down because the strength of the dollar has been ridiculous, and also everything going on in the macro. We are seeing a really strong move in the euro, though, now breaking through resistance. I'm actually long the euro until at least 1.035. I'm also long oil. This is my first futures contracts I've actually taken on oil, but we are getting a new higher low here, and the strength is picking up for this asset. I also think there's a lot of supply constraints, so I think we're going to see oil probably rip up at least closer to the 100, 110 range. Bitcoin, again, officially broke that really long level of resistance that we've had pretty much all year, and even on a shorter term time frame from June, we've had a serious downtrend form this wedge. Now have broken out of this wedge and are heading at least, I think, key levels to keep an eye on is 22,900, which is the previous, local high right here. I wouldn't be surprised if we see some type of rejection off that level. If not, I think we do carry up to 25,400, and I'm not really a big buyer in this region. I've already been buying a lot as we've been touching support right here, but I would be a buyer above this region, and the reason is because if we officially close a candle above 25.5, that would put us in a lot more of a bullish trend, and that would give the probability of a trend reversal. It would increase that probability of a trend reversal, I should say. So you got to realize that there's certain areas where, yes, we are looking more bullish. Yes, the strength of the assets picking up. Yes, everything's looking good, but it could be somewhat of a fake out until we officially break this previous high, which was also this support over here. So I do want to see a big confirmation by breaking above 25.5, and really it's 26,000 for Bitcoin. But all is looking good on a shorter term move. I am bullish until the end of the year. Now, I've flipped on the side of being bullish. By the way, when I say, hey, I'm bullish, that means that the probability, in my personal opinion, by the way, this is not financial advice, this is my personal opinion, that the probabilities and the odds of assets going up in value now, considering everything I've shared it 11 times about the statistics before and after midterms. Relatively speaking, after midterms, there's never been a time in history of the stock market dating all the way back to the 1960s where we've had a negative return 6 and 12 months past midterms, which midterms is literally next month in November. Okay. We also want to be keeping our eyes on this date coming up, which is the CPI data coming on November 14th, and that will be for October. You can see that the inflation rate is on a downtrend. It would be very bullish if, obviously, we got to figure out what the expectations are. But it'd be very bullish if we saw this in the high 7s to mid 7s. If we could get close to like 7.6, that would be very bullish for markets to see CPI falling off a cliff and continuing this downtrend, because again, the Fed is trying to slow down the velocity of money, and they do that by tightening, by increasing the interest rates, because then less people want to borrow money because it's more expensive to borrow money. So people spend less money, businesses make less money, and earnings per share, earnings for the business then sell off, or go down, I should say, and then the stock actually sells off. And we typically see that drip across, especially speculative assets like Bitcoin. So we do want to see the inflation coming down to incentivize the Fed to stop hiking rates, because that is the number one reason why they are hiking rates, is to bring inflation down. So I'm keeping my eye on that date of November 14th. And I would say I also want to end on this little piece of data for you too. If we were to look at bullish times for stock markets, typically the last quarter is actually very bullish for the stock market. You can see, this is from the 1980s to 2009, which I'm sure that the data would reflect the same moving forward as well. But if you were to look at historically, okay, we typically see after the first quarter, you usually see a pretty bearish first quarter in the stock market. Not all the time, but a lot of the times, at least recently, we have. In the second quarter, typically picks up, and then the last quarter is typically very bullish, if not the most bullish time for the stock market. So everything is pointing in the odds of a shorter term rally. That is not to say that I don't think that the economy could, dip into a serious recession, aka depression over a longer period of time, if we see that in 2023, 2024. But in the shorter term, I do think we are in the favor of a pumpity dumpity up and to the right. And you also got to realize, last thing is, you got to realize anytime you're trading on an exchange, okay, that is a secondary market, and the majority of people are wrong, and retail investors are typically always wrong. It's very rare that you can get consensus for retail investors for that to actually be true. So in order for you to win in the secondary market, someone else has to lose. So really, you got to get the consensus of what is everyone kind of thinking collectively, and let me pretty much do the exact opposite of what everyone else is thinking. And I don't know about you, but I've heard pretty much everyone say that everything is going to zero, and there's been more fear than I've ever heard in my lifetime, at least. Which I know I'm not 87 years old, but over the decade that I've been following financial markets, this has definitely been the most bearish time that I have seen in the history of my time paying attention to financial markets. So it's been quite extensive. The amount of people that are betting on everything having a really great collapse is honestly starting to make me bullish. But let me know what your thoughts are in the comments section below. Do you think this data at all matters? Do you think the CPI is going to fall below 8 to the mid 7s? Do you think we're going to have a bullish end of the year? I would love to hear your thoughts in the comments section below. Thanks so much for watching, and I'll see you on this next video.